The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. It is Wednesday night here in Asia, and we did a pretty good webinar last night. Had a couple of technical difficulties. We're going to have that in the archive pretty soon. I might do some editing on that, but I think we got some points crossed with the scanner. We're going to try to review some of that today. And let's start off with some of the things going on in my neck of the woods over here. Here's the Shanghai. And, you know, this is something, volatility is here. And this over 5% pullback, I mean, there was a 10% range yesterday, actually. But we had a pretty good rally back, and we also have had a profile appear. And the support area for the Shanghai now is the 2762.84 area, and that wasn't there yesterday. So now we see a kind of a basing action, and we always talk about price action being above or below profiles when new profiles appear. This is a relatively bullish situation, and this was in force when this bar opened right there. So we also talked about yesterday the breadth being relatively positive. Well, extremely positive on the weekly for the Shanghai. And, you know, this was kind of a, go up really fast, take some profits, kind of pull back. And I was talking about this yesterday and actually in the webinar last night that, we may see the Shanghai just kind of race forward. And I wouldn't get caught up in a big volatile move down here in one day. And the reason being is as I pull this up, I want you to see how this has kind of worked out here. Here's the Shanghai and these speedometer dials. If you can see how extremely bullish this weekly still is, and I think we were 77 yesterday, now we're back to 86. Daily's positive, 240's positive, 60 positive. So as we look at this, this is kind of information, you really don't want to start looking at this from the short side in a large way, bottom line. And I want to pull up something else here also. I want to pull up some dates, and I've got the admin version. I just want you to see one of the reasons why I'm a big proponent of what's going on here. I've got the Shanghai up, and I want to go back into my weekly kind of historic charts here. And I want to kind of show you some things. As you can see, I mean, my goodness, that is runaway train here. Let me just take out our in-between mode there, and let's focus on July 11th and the other inflection point around April 11th. So July 11th and April 11th. And we can take a look also a little bit farther back. July 11th and April 11th. So what I'm going to do is I'm going to go over here to my charts again. And I'm going to go back in time to, this is our daily setup for the Shanghai. Scroll over here. And let me expand it up a little bit. Okay. So as we go back in time, and we're going to just kind of get to our dates here if I can pull this up. This was okay, so this was July 11th. You can see that. And as we've turned breadth positive on the Shanghai on July 11th on our weeklies, we've been breadth positive since then, and we're still breadth positive. So the long-term trend was kicked off on July 11th by the breadth changing to positive, and there's July 11th, right? Now, as I go back in time, we talked about, come on, E-signal. Come on. We talked about the other rollover date, if you will, and that was around April 11th. Okay? So let's go back to April 11th. There's April 11th. Okay? So from April 11th down into July 11th, we stayed breadth negative, and that was just a short spin there. But as you can see, what this really tells you to do, in my opinion, this is attached to the scanner, and it's something that, again, out in the institutional world, we get quite a few points for this. But what it's telling you is, as that breadth turns negative on the long term, and there's April 11th right there, you're looking for opportunities to short, namely getting below these inflection points, namely going back into these inflection points, being able to short this thing. And, you got caught off guard there, but that's okay because you're above the daily profiles and you're using these inflection points on the index that the breadth is providing the information on to try to, get some leverage, get an edge, if you will. And, by default, up in this area, it's kind of okay to be long, not okay to be short on the intermediate. But as we start having opportunities to key off of, namely here, we were passing on the long opportunities because the breadth was telling us that it was maybe not the best situation in the world to kind of trade against the long-term trend down via what the breadth is telling you. So we're passing on long opportunities and trying to leverage the short opportunities here, and then when the breadth turned positive there, we're looking for long opportunities. So as we move forward from the July 11th, is that July 11th? July 19th? What was it? Here we go. July 11th, here we go, right there. So as we look at July 11th with the breadth crossover happening, we're looking for buying opportunities. And we're looking for buying opportunities on a lot of different time frames. It just so happens that the breadth turned positive back then, and we've been looking at inflection points, breakouts, buying support, buying breakouts, buying support, buying breakouts. And obviously, if you're trading on the dailies here, this was something you were passing on the short side, getting stopped out of these longs, getting back in the game here, breakout, and not really giving any technical reasons to get out of the long-term trend, except back on October 21st into, I guess, October 29th. So it's kept you relatively on the right side of the marketplace here, being the long side since July 11th. And here's what Shanghai has done recently, in case you've been in a cave somewhere. This is I can't snap that back. But that's why I don't think this particular thing's over with, and it's not going to be hell in a handbasket for the Shanghai anytime soon. Let's look at the S&Ps and kind of bring up the same light situation. And as I go to my scanner again, I'm going to pull this up, and I'm going to get into the S&Ps. As you can see, our dial's changed right there. Breadth is still relatively positive. And that means that we're looking for long opportunities on the index itself. And as we turn out the chart here and look at our S&Ps on the weekly, and I'm going to blow this up so you can see this. October 17th, in that general area, was the breadth turning positive again, or between October 17th and October 24th on a very long-term basis. But before then, September 19th, called the top, breadth turning negative. So right now, we're still kind of in that, and I could go back in time and really point out some killer crossovers here for you. But that being said, and the long-term breadth being positive, I'm drilling down into my charts here, and I'm looking at the weeklies. We know that 2014.5 area is big-time support for the S&Ps on a long-term basis. But, when we had this action happen, I'll try to get these charts right here for you. Okay. As we had this action happen going up into, this sell-off, and use good money management rules, even if you're following this breadth. But as we came back up to this inflection point, we were kind of a buyer above, passing on some of the shorts here. And that's okay. You can't win them all, but the leverage, in my opinion, is still to look at this from the long side. If we get any kind of migration back up above the 2059 area, and especially a close, I think 2075 and even higher will be a foregone conclusion. The only way I'd start looking at this a little differently from the short side is if we had some kind of crossover start to happen. But I really, the action yesterday kind of was pretty damning for the shorts. We may settle back here a little bit. This is not every day is going to be, a massive victory for trading breadth. But to me, it eliminates one side of the marketplace, in this instance, the short side. And I'm looking for crossovers back above 2059 to actually get long unless that breadth changes in the meantime. And the only way you'll know that is if you're looking at, the scanner and looking at these real-time dials here. Somebody's asking about gold in the den. I'm going to take a look at that. Let's see. My God, there's been a lot of gold comments there. Whew. Okay. So the question is, on the topic of the S&Ps, a short below 2059 doesn't sound crazy. You're right. I mean, all things considered, without the breadth involved, and if there's a lot of opportunity here below the 2059, and to be honest with you, on the dailies, this is something that you have to pay attention to. The good news is on the short side, you can put stops oriented relatively, tight or loose based on your appetite for risk on this particular trade. But that breadth just it has a lot of weight with me, and we've done a lot of research on it. I don't want to sway your opinions here too much, but I'm looking at this still as trying to buy support and laying off the shorts, because I feel like that's the wrong side of the market to be on for me. So let's get into gold, and let's take a look at gold really quick. Gold was something I think I even used the word hope the other day. I was hoping that we would move north on this. Here's the 1218, 1219 weekly unfair highs. We don't have any new boxes there. But because we kind of get shaken out of this, it's not a terrible thing to take some small hits every once in a while. As we kind of cross the border down below here, but we kind of started completing this pennant flag looking thing and getting back above 1198, 1199, and retesting it moving forward. That was a very opportune time, I think, for gold to for traders to get long gold. Now what do we do? Let's see where we've come down to today. We've come down as low as 1225. Okay. And the question, I guess, is, I tell you what, I'll look over the comments and then we'll address that right when we get back. Thanks, guys. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Taking a look at gold, looking at a scanner, and actually seeing, just to kind of look at this like those guys read the Matrix code in that movie, if you ever saw it now. So I just kind of look at it and glance and say, you know what, I better not be short this thing. That's kind of the no-no. As I see, we're above weeklies, we're above dailies. We're within profiles on the 240 here. Is that right? No, I'm sorry. That's a I don't know what that is. So what we're doing here with the dailies and the 240s, we actually adjust in gold right now. Can you take a look at gold and 240 on the scanner for a second, Michael? Because I know why that's doing that. We're above profiles on the 240s. We don't have any new profiles attempting to appear right now. We're just kind of sitting up here with our chin out on gold. February, is that yeah, 240, yeah. So we got some guys working on the scanner right now. So as we see this, I don't see a lot of reasons to really start looking at taking off any profits yet on gold. I think this is the kind of thing. I mean, if the markets, the stock market starts rallying again, and everybody thinks the world's back together, I mean, that could happen, and gold could maybe suffer just a tad. But I want to take a look at the dollar on a relative scale to this really quick. Let's see if I can get this. Okay. And we can maybe get a bearing a little bit more so on where gold might go by kind of looking at the dollar a little bit here. New box appearing today on the dailies on the dollar. Let's just call it 88, rounded off, and then 89.30, 38 up top. Kind of sitting here. We're going to probably bounce around a little bit here in a new profile. I have no idea. I know we're still in an uptrend by definition by looking at the weeklies on the dollar, and there's the weeklies. But taking a look at the 240s, I mean, it's kind of a crapshoot in my opinion on the dollar. So that's not, that's not going to be a damning piece of evidence for gold to go one way or the other right now, in my opinion, today. So the stock market could, allay some fears by poking his head back above to 2059 and even going farther north. But gold, in my opinion, is just a long hold right now. Make sure you put your trailing stops in on something like that. But, I see some blue skies ahead for gold. And I've said that before, but I think we've got some technical things in our favor on this one. Let's take a look at the Wild West of silver really quick while we're taking a look at gold. Oh, actually, I wanted to get back to the Nikkei when we were talking about the Shanghai. I wanted to go to the December Nikkei contract. So here's the situation on the Nikkei, and I'm going to try to blow this up a little bit. And I really like for you guys to take a look at what we've been talking about with that so-called yen. It's an inter-exchange spread at best by looking at the yen versus the Nikkei and the disconnect that I thought was going to happen there. But 17,287, we kind of come down and tested this bottom of this profile 2 days in a row, almost to the tick here. And I want to reference the yen really quick here. Something I watch pretty intensely over here. Here's the long-term situation on the yen. Not a lot to talk about there. Here's the daily situation. So, the yen's a little bit stronger on a relative scale than the Nikkei going up here, and the yen support is at 118.08. So if we get into that area, considering that the trend is still up on the yen, I'm going to be a buyer of 118.08. And in my opinion, your targets are going to have to be paid attention to 120.59 on that. And how does that affect the Nikkei? So 118.08. Let me go back to the Nikkei. A little slow here this morning, guys. Sorry about that. And as you can see, it's kind of a tandem trade here. So we're going to take a look at a couple more things when we come back involving the scanner. Hang around, guys.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, guys, actually the scanner was right on gold, and our charts were actually wrong. So there is a little bit of a 240 situation here, and we were doing some maintenance on everything here, and the scanner actually on gold, just to point this out again, within profiles on our 240, 1223 and a 1235, and I had the charts actually wrong on the 240 in particular, and gold is going to have short-term support, that 1219 area, which is coupled with that 1219 on the weekly, which is going to be, kind of a dual time frame lining up. The scanner actually, we're looking at it on the break, and I apologize for that, for not having our charts regulated with the scanner actually. Scanner's always right. Okay, so I was using, and we were going to take a look at silver actually, really quick. Okay, and here's the weekly on silver. And remember that unfair low at 1703. We're trading 1723 right now, so we don't have a weekly close within the fair auction right now. But here's the daily, and that breakout happening above that 1675 all-important area. Now, it's almost getting to be okay to be long, not okay to be short, since we crossed some borders on the weekly. So very powerful move in silver from down in the, good God, how low did this get? That's a breathtaking move. Breathtaking. Whew. Wow. Okay, so the short-term numbers on silver, you got similar to gold, you got 1723 up top on the 240s and 1676 down below. So that's the short-term resistance and support on silver. But again, I think you on a long-term basis, you're kind of getting into okay to be long, not okay to be short right now in the silver market. So let's take a look at a couple of things I was looking at earlier. I'm just going to kind of bring up the scanner, and the markets may pull back. They may move forward and cross the 2059 area on the S&Ps. But I was, just kind of using, and let me get rid of this, and I will put the S&P 500 back up. Wait for that to populate. A little bit slow line here. I'm just going to kind of pull this up. I'm going to pull up one of the stocks I was searching for earlier. Yeah, we do have a little bit of slow connection here. Anadarko. Was looking at this. Scanner picked it out for me earlier because we had a, kind of a close below and a retest of the 78.64 area. All right. So obviously this is, somewhat oil related, and here's the weekly situation. So having that weekly close and then kind of coming back and retesting those daily unfurlows, and considering that the 240 unfurlows, 78.64 daily, then we've got 78.25 on the 240 unfurlows. And here's the situation. The reason that I was looking at this, I'm going to go back into weekly, and I'm going to say, what do I want to see here? I want to see things trade below the box on weekly. And what I was doing was I was trying to find things that were settling down, getting below profiles, which is a very rare occurrence on the S&Ps, as you can see. Not many stocks out of the S&P 500, and trying to find stocks that were sitting around inflection points. So, I used the weekly as the main barometer, but then I was going into some of the daily information here and trying to find inflection points that were lining up. And here's the APC. So it's a down stock and then a possible retracement back up into those daily unfurlows. And that's basically what we have. And this is kind of the landscape of what that looks like, looking at all the different time frames with the profiles in force where you can see the numbers really quick. So I was looking at APC, and considering that we've got the 240s almost lining up with the dailies, we've had the retracement, and we've also got a situation on crude oil. I was looking at natural gas for the first time in a while, and I want to make some comments on that. But, crude oil seemingly, I don't see any end in sight for this. The thing that's concerning, though, is that I don't know I haven't read a lot of articles at all on the contrary. So that means a lot of people are getting on the same side of the fence right now here at the bottom on the short side. So you got to take that for what it's worth, and continue to put your stops in, especially above that 65.13 area. But I think crude oil is just kind of crowding the border down here on the downside, and we'll probably do another little shot down below to make sure it gets everybody out, all the longs out of the oil market, and APC may be the beneficiary of some of that more downside movement in crude oil in general. So that's why I was kind of picking that out. Another couple of stocks that were in the same situation. This is something in my backyard in Raleigh, North Carolina, Red Hat. And here we go. So sitting on weekly unfair lows, which is the 59.23 area on Red Hat. Let's look at a little bit more action on this, price action that is. Okay, so that's the landscape. We've had this new weekly box appear now, and I want to take a look at the daily situation. So what this was telling you basically below the 6106 area, and I'm not looking at a lot of other indicators right now, but below the 6106 area on an intermediate basis, it was not okay to be long, and we've kind of had some follow through here. But what do we do now that it's approaching weekly unfair lows? We want to that's kind of a profit target, if you will, on that intermediate trade. But if we can get it closed below the 61, what was that number again? 59.23 area, then we're going to have some, things in our favor here, and we're going to be able to leverage more so off the 59.23 area on the short side for Red Hat. Pre-market here, we're trading 59 and some change, 59.15 or something like that. And here's the 240s that I use to regulate these trades down a little bit farther. So, again, something the scanner picked out is just something to leverage against the 59.23 area mainly today. And if we get back above there, then I think you've got to be looking at this, that it may be migrating a little bit farther north. But this is kind of a quickie. I know we've sold off a little bit here, but if the market gives a little bit more cooperation on the downside, this would be, considered a weak stock, showing its hand a little bit early, and maybe able to pick up some points off of it. A couple other stocks I was looking at, COP. Again, let's just look at somewhat oil related. So pick this out because we've got a big inflection point there at 65.33, and on the daily, we kind of come back down below, retested former support, now resistance with a little bit of noise there. And taking a look at this, now we're getting into some dangerous situations here on the downside. So the reason I picked it out, and as you can see, we kind of leveraged off the unfair high on this weekly profile, then caught a little bit of a bounce here on the bottom of our weekly profile. But this is extremely damning for the longs here because it's the first time we started breaking down again below profiles, just like we did back in July. Close below, retest, right? Now we're kind of possibly going to go through the same motion here. And because of the bearish sentiment on crude oil, I think this may actually be something that would work out relatively well. Okay. Another one we were looking at this morning. This is the one I kind of like more than anything else, really. It's Jabil Circuits. So, kind of been waffling around here. This is the weekly situation, and those unfair lows around JBL is like 2072. So we've had the close. Well, let's see where we closed last week. 2071, 2072. Close right on the border pretty much there. But you've got that 2072 sitting there, and you've got this 2051 now that we're starting to kind of go back and retest. So I like this 2051, 2072, or 2071 DMZ to short JBL. Okay. Let's see if I can get my mouse in the right place here. The other one that was kind of interesting here. Sorry, I typed in wrong symbol here. NFX. Similar situation. I like these kind of setups here. Let's move this down here. Another kind of exploration company. 2679. This is NFX. Again, getting down below profiles, using inflection points on the short side, closing below, and now providing somewhat of a retest here, going back up into an inflection point on the daily with the verified kind of okay to be short, not okay to be long on the weekly. And that trade on NFX on daily unfair lows are at 25.33 leverage point here. God, I'm sorry, guys. I think my connection is deteriorating here. Should we do a reconnect now? Are we okay? Okay. Cool. All right. couple of stocks I was looking at from the short side. Now I want to kind of take a look at some long stocks. We're going to do that in the next segment. I want to cover a couple of things we haven't covered this morning. Let's take a look at this Australian dollar trade that I've been kind of pounding the table on the short side for a while. I want to kind of enlighten you about what's going on with it. Again, here's the breakdown, retest, head lower, weekly situation. Here's the daily. So on the Australian dollar, just because we finally do have somewhat of a new box that's attempting to appear on the daily, this may be enforced at the end of the day. We'll have new inflection points. This is kind of a sign in itself that we may want to kind of look at this short with suspect eyes right now and start thinking about possibly taking some profits on the short side finally. But you do have, I think one more chance to play around with the kind of an well, not an intraday, but kind of that orange bar on the daily is an indication in itself. But you do have a decent leverage point here. We're using these 240s at 83.50 to take a look at this, again, with one last kind of hurrah from the short side. If you're thinking about position sizing this, just like we had a little bit of a rally yesterday and then kind of a sell-off, you've got a situation here where you've got a decent high probability setup, again, from the short side. And if you're scaling in and scaling out, this may be an opportunity to put some more on with a relatively tight stop on these, or excuse me, on those particular contracts today. All right. I got to bring this up because this one's kind of amazing. And they are calling for this now to go to 60, this USD ruble trade. So right now, pre-market, I think, or not pre-market, but current market conditions, 54.30. And as you can see, there's not a lot to, tell your favorite relatives not to short the ruble right now. Or excuse me, not to go against the USD ruble long trade right now. Take a look at another one, OXY, Occidental. And again, these are patterns just picked up by the scanner itself. Here's the unfurled lows here around 77.60. And I personally like these type of formations. We close below or close above, go back and retest. And I hate missing these opportunities. That's why the scanner really is very cool to kind of just, let you peruse through some of the trades that are lining up with some certain inflection points happening right now. And let me just kill that. And let's take a look at this. Let's go to bottom. Let's choose daily. So what that's going to do is that's going to line up a whole new list of candidates meeting that criteria, and I'm going to get into a couple of these when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I think we need to cover some of the things that are going to be happening in the next 4 minutes. Pre-market here, we're getting... what is this, 8:55 your time? All right, so let's kind of revisit the S&Ps a little bit here. Okay, finally coming up. My thoughts on this, since we've got the breadth still positive on the weekly and the daily situation, and here it is. And this is a compilation of all the 500 stocks in the S&P, looking at the profiles, whether we're above or below or within, and giving some readings. And as you can see, we're kind of breadth positive across the board, but mainly the ones I'm looking at are the weekly and dailies, and that's the time frames that I focus on. If we get back above 2059, I think there's going to be quite a few people who are going to have to start covering shorts, and that may happen. So the breadth combined with what's happening here on the price action, still staying away from the short side, just out of the market on the short side right now, based on what we just talked about. Haven't given numbers on the NASDAQ in a while, so here's the situation on the NASDAQ as we're waiting for it to come up. And these are the same numbers out of the scanner. Got a little bit of a possibility of a new profile appearing and locking in if we got Friday's closing on the horizon, and this is continue to stay orange, and that would be on the scanner. And let me just get rid of what I was searching for here. Okay, Get rid of that, pull up features, and here we go. Oh, I've got something chosen here. Clear sorting. Okay, here we go. All right, so let's take a look at the NASDAQ. Okay, so as you can see, the NASDAQ, we do have a new box attempting to appear. Current levels are still upper part of the box that's currently in force is 40.75, and then we see that we're kind of within profiles across the board everywhere else. So here's the numbers on the daily. Unfair highs, which are on the scanner, 43.3, unfair lows, 42.60. So again, a relatively tight profile on the NASDAQ. And, obviously from a relative strength standpoint, we've gotten back into profiles unlike the S&Ps. And this kind of makes me think also that the NASDAQ could drive the S&Ps even higher and start shooting for 43.33, and believe it or not, even higher. And I can't believe I'm even talking bullish lingo here. But the breadth is the breadth, and I'm not going to argue with it too many times. The DAX, we haven't even spoken about this. Weekly numbers, we had kind of a big move around in Europe. Those numbers on the weekly, 98.96, 98.96, and we're getting back down into that fair auction here. And on the daily, the numbers are 98.13 down below and 10,000 up top. So if we get down below 98.96 and then 98.13, the technical damage will definitely be in play here starting on the DAX. So I think you got to if you're trying to play long bounces here, you've got some opportunities, 98.13 to 98.96, kind of sitting in that DMZ right now. But if we get below 98.13, I think you got to say uncle and just kind of sit on the sidelines on buying dips on the DAX. And what's happening right now, with the Greek situation, is they're kind of waiting, which is causing panic in Greece. But so I think if they want to kind of put this into action a little sooner, you may see a bounce in the DAX. So be prepared for that. Steve Rhodes is next, guys. I might be off the next few days. In fact, today, you guys hang in there, and I'll talk to you by Monday at the very least.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.